Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, the markets continue to be volatile and challenging. And last Friday, Federal Reserve Chair Powell had a speech at Jackson Hole, and he rattled the markets. And we continue to see some downside. So I wanted today to talk a little bit about some market history and discuss what could potentially be in store for the next decade or so. And as we often talk, the market is not necessarily, meaning, well, I should say the past doesn't necessarily equal the future, but the market history tends to rhyme. So let's dive in and today talk about the possibility of another lost decade. Well, let's give us some context. What's the lost decade? You may recall from the period of 2000 to 2012 where the S&P 500 effectively went nowhere. So looking back at around the March 2000 timeframe where the S&P was 1442, you could see, we had the dot-com bust on the left side here. We had the recovery, and then obviously the financial crisis, which bottomed in March of 2009, and then the recovery. So over the 12-year period from 2000 to 2012, the market effectively went nowhere. Now, this excludes dividends. So if you include the average dividend of the S&P, it's around 2%. But on a simple price weighted basis or price basis, the market went nowhere. So, and if you may say, well, I didn't have all my money in stocks. If you had a traditional 60-40 portfolio, this lost decade, which is, again, it's a sort of a famed phrase based on that time frame, a 60-40 portfolio, which most people have some type of stock bond allocation, with the 40% being bonds and of course the 60% being stocks, returned just 2.3% annually to investors. So whether you had your money in an S&P fund earning, as an example, the 2% dividend, or a 60-40 portfolio, you effectively earn around a 2% return, which in that time frame basically offset inflation. And obviously, if we have severe inflation and that is sustainable on a purchasing power basis, an investor is likely going to lose money. So let's continue on here. Kirby Cundiff from Seeking Alpha, it's actually one of the more credible investment websites and publications out there, says that his belief is that, again, this is only one person's opinion, is that the decade of the 2020s is likely going to be another lost decade for the S&P 500. And his position is U.S. value stocks are likely going to outperform U.S. growth stocks during this period of the 2020s. And many international stock markets are likely to outperform the U.S. stock market. Now, of course, I wouldn't get too hung up on one person's opinion because, of course, everyone has their opinion and we'll end up seeing what happens, right? Time will tell. But he brings up, a valuable point. Well, why would one think that the next 10 to 15 years is going to be another lost decade? Well, looking at history, there's a lot of evidence that suggests that he may be right. Now, you may have, if you watch our videos in the past, you may have seen me reference this chart. This is a chart of the S&P 500 going back till the 20s. And what I want to expound upon is the period of time after the market has a big run-up where the market effectively goes down to nowhere. So, for example, on the far left here, you could see in the late 20s, we had a big run-up, and then from about 29 to 52, the market effectively went nowhere. A whole lot of gyrations up and down caused likely, obviously we had the Great Depression, the market crashed, a big recovery, but effectively in this period of time, the market went nowhere. And then fast forwarding from the period of 69 to 79, again, the market went nowhere. The theme here being after the market has a very big run-up, like we saw in 52 to 69, we effectively have a go nowhere market. Fast forward, again, we just talked about the lost decade around 2000 to 2012, 2013. Again, after the market had a big run-up from around 79 to 2000, the market went nowhere. So if you look at the upper right hand corner, obviously we've had a very big run up for many, many years. So the question is, will the next 10 to 15 years, again, after we've had a big run up, look like the periods of times that we just referenced? Well, according to Kirby Cundiff, if the CFA from Seeking Alpha, there's a very real chance that happens. Now, again, it's his educated guess, and everyone has opinions, and obviously a study of market history gives Kirby and folks like him who understand market history and what likely will happen, or at least what's probable, or at least what's possible, a conviction and our belief. Obviously, a lot of things can happen. The Federal Reserve is, let's call it, influencing the market more than it ever has been, with quantitative easing, with obviously, their position on lowering rates or increasing rates. So the question is, okay, that's great, Chris. Thanks for sharing that information. What do we do? So instead of having a traditional 40 portfolio, look at considering reallocating money to, for example, private equity or hedge funds, private debt, even a long-short market neutral strategy that participates in the upside and downside. So this is not a blanket recommendation, because obviously, if you're a client, we know your situation, very intimately. But if you're not a client, you have to understand what your risk tolerance is, what your time horizon is, and how and have a portfolio that is created or crafted to help you accomplish your goals, which would match your risk tolerance, and of course create the ideal return for you over a period of time. So again, this is not a blanket recommendation to everyone, because everyone's situation is a little different. But these are just some themes to consider. All that to say is, understand where you're at in the market environment, and certainly if you want a second opinion on your portfolio or financial situation. Again, the markets are challenging. There's a very real possibility that things get worse. You could go ahead and go on our website, click on this Contact Us tab, and fill out your information, and one of our advisors will reach out to answer your questions. Thanks again for watching. Take care.